Welcome to the Deep Dive, your express route to being truly well-informed.
Glad to be here.
Today, we're plunging into, well, a fascinating paradox. We've got a company that's not just hitting revenue records, they're absolutely crushing them.
Right. But at the same time, they're navigating this bewildering multi-front legal battleground. It's quite the contrast.
It really is a tale of remarkable financial success colliding head-on with these persistent regulatory and legal challenges.
And that company is DraftKings. We're focusing today on their second quarter 2025 business update and their latest Form 10Q filing.
Yeah, and these aren't just, dry reports.
Not at all. They're packed with critical insights. You've got the huge financial achievements, but also the really intricate details of ongoing legal fights and their strategic plans for what's next.
So what's our mission for you in this deep dive? We're going to extract the most important nuggets of knowledge from these sources.
The goal is to give you a clear, concise, and hopefully comprehensive understanding of exactly where DraftKings stands right now.
How it's growing, and the significant hurdles it's facing. Think of this as your shortcut to truly understanding the complexities surrounding this digital sports entertainment giant.
Definitely. Let's jump right in.
Okay, let's start with the big financial headlines because, wow, DraftKings just posted some truly eye-popping numbers for Q2 2025.
Yeah, eye-popping is right. Their revenue growth actually accelerated to a stunning 37% year over year.
So what's the biggest takeaway from that, beyond just the big number?
Well, the biggest takeaway is that they're not just growing, they're reaching new peaks of profitability. They hit record revenue, $1,513 million.
Okay.
And their adjusted EBITDA, which, for listeners is basically a measure of operational profitability before certain costs like interest and taxes, it soared to over $300 million.
Over $300 million?
Yeah. And to put that in perspective, that's double their previous record. Double.
That's incredible. But what's interesting is, despite that huge quarter, they're actually maintaining their full fiscal year 2025 guidance.
They are, yeah. Though they did signal they expect revenue to be closer to the high end of their range. So it suggests, a deep confidence in their underlying business momentum, not getting ahead of themselves, perhaps.
Right. So they're not just bringing in more money, they're getting significantly better at turning that revenue into actual profit.
Exactly. The company even described themselves as being in the early innings of adjusted EBITDA growth.
Okay, early innings. So they think there's more to come. How are they actually achieving this kind of impressive margin expansion?
It seems to be a strategic blend. On one hand, strong product enhancements are driving that robust top-line growth.
Makes sense.
But it's combined with what they call prudent cost discipline and efficiency initiatives across the whole organization.
So basically getting smarter about how they spend and operate.
Precisely. Leading to what they term meaningful adjusted EBITDA margin expansion. Their long-term target is pretty ambitious. 30% adjusted EBITDA margin.
30%, wow.
And you see it in the net income numbers, too. It jumped from about $64 million in Q2 last year to nearly $158 million in Q2 2025.
That really underscores how effectively they're converting that revenue growth into bottom-line results.
Absolutely.
Okay, now let's peel back the layers a bit and understand how they're actually making these games stick. The sources clearly highlight DraftKings Sportsbook as a major driver, right? Especially gearing up for NFL and NBA seasons.
Definitely. They position themselves as having the #1 rated sportsbook product.
What makes it stand out, according to them? What's the innovation there?
Well, their strategy involves continuous product innovation. They particularly focus on a best-in-class live betting product.
The in-game stuff.
Exactly. And they're integrating hyper-flexible merchandising and social features, too, designed for real-time engagement. So it's not just placing a bet before the game starts.
It's about making it interactive during the game, keeping people engaged.
Right. As the action unfolds, moment to moment.
That real-time engagement sounds absolutely key. And when we look at the specifics, Sportsbook net revenue increased by a massive 45% year over year. That's a huge leap.
It is huge. And there were a combination of factors. The report notes that sportsbook-friendly outcomes in May and June helped.
How much did that contribute?
That alone added about $110 million to their revenue, which certainly gave them a boost.
Okay, so favorable results helped. What about the actual betting volume?
The total amount wagered, which they call sportsbook handle, increased 6% year over year to $11.5 billion.
Still growing, but maybe not as fast as the revenue.
Right, but crucially, live betting handle those bets placed during a game increased by 16% year over year.
So that focus on in-game betting is really paying off then.
It seems so, and the profitability of those bets, that's improving significantly too.
How so?
Well, their sportsbook net revenue margin hit a company record at 8.7%. That's up 230 basis points year over year.
So 2.3 percentage points higher profit margin per bet, essentially.
Exactly, a significant jump. And their structural sportsbook hold percentage, which is, basically the house's built-in edge, that increased 100 basis points, a full percentage point year over year to 10.9%.
And the actual hold was even higher.
Yeah, it exceeded 11.5%, thanks to those favorable outcomes we mentioned. Plus, something else interesting. The mix of parlay bets in their handle increased by 430 basis points.
Over 4 percentage points more parlays.
Yeah.
And those are generally higher margin for the house, right?
Typically, yes. And one more thing. They improved promotional reinvestment by nearly 600 basis points year over year.
Meaning their marketing spend, their promos are becoming much more efficient, getting more bang for their buck.
That's the idea. So you put all these metrics together, higher hold, more parlays, more efficient promos, it paints a clear picture. DraftKings isn't just growing handle. They're getting significantly smarter and more profitable on each bet.
Makes sense. Okay, beyond the dominant sportsbook, how's their iGaming business, the online casino side, contributing to this overall picture?
iGaming is also showing pretty significant strength. Net revenue there increased 23% year over year.
Still strong growth. What's driving that?
Primarily driven by robust growth in active iGaming customers. And what's particularly interesting, gross gaming revenue from jackpots specifically increased over 100% year over year.
Double the revenue from jackpots.
Yeah, which indicates rapidly increasing engagement with that specific feature. It suggests players are actively seeking out and enjoying those higher stakes, higher reward types of games within the platform.
It really sounds like they're building a diverse portfolio of digital entertainment options.
Trying to, yeah.
And speaking of diversification, their other revenue segment also saw a healthy increase. That was driven by an acquisition, wasn't it?
That's right. Other revenue increased by nearly 27%, primarily due to the acquisition of Jackpocket.
Which is the digital lottery courier app.
Exactly. They bought it in May 2024. And this acquisition isn't just about adding lottery ticket revenue streams.
There's a bigger strategy.
It seems so. It's strategically designed to provide sort of ancillary benefits for customer lifetime value and acquisition across their other offerings, like sportsbook and iGaming.
So it's a way to broaden their user base, maybe convert lottery players into bettors.
Well, potentially. Cross-selling opportunities.
Which brings us nicely to their key performance indicators, the KPIs. These give us a real pulse on their customer base, monthly unique payers, or MUPs.
Right, MUPs increased by 6.5% year over year to 3.2 million on average for Q2 2025.
That's a pretty strong signal for retention and acquisition.
It is, and even if you exclude the impact of Jackpocket, MUPs were still up 4.7%, so core growth is there.
And what about the revenue from each of those users? ARPMUP.
Average revenue per MUP, or ARPMUP, increased significantly. It was up 29.1% year over year to $156.
Almost 30% more revenue per user. That's substantial.
It really is, and that increase is primarily due to those structural improvements in the sportsbook hold and the optimized promotions we were just talking about.
So the efficiency gains are showing up here too.
Definitely. And again, even if you strip out Jackpocket, ARPMUP was up over 30%. It shows strong monetization across their core offerings. It's not just getting more users, but each user is becoming, well, more valuable to the company.
Okay, so with all this strong financial performance, this growing, more valuable customer base, how is DraftKings strategically allocating its capital? And what does the future outlook tell us?
Well, they're clearly focused on maximizing shareholder returns. That signals confidence in their own stock's value.
How are they doing that? Buybacks.
Exactly. In the first half of 2025, they repurchased 6.5 million shares, spending about $243 million.
And that's part of a bigger program.
Yeah, it's part of a stock repurchase program authorized for up to $1 billion back in July 2024. So this is a direct return of capital to shareholders.
Alongside continued investment in organic growth, presumably.
Oh, absolutely. They need to keep that revenue engine humming, so it's balancing both.
And what about their financial guidance for the full fiscal year 2025? Are they still on track with those earlier projections?
Yes, they're maintaining their guidance. Revenue expected between $6.2 billion and $6.4 billion, and adjusted EBITDA between $800 million and $900 million.
And does that guidance now account for any new developments?
It does. It now includes the anticipated financial impacts from launching mobile sports betting in Missouri later this year.
Ah, Missouri. That's a potentially big new market opening up.
Could be definitely an opportunity.
Any other factors influencing that guidance that might surprise listeners? Or maybe not surprise them?
Well, maybe not surprised, but it's notable. They've also factored in higher tax rates in New Jersey, Louisiana, and Illinois.
Right. A reminder of the ever-evolving regulatory landscape
Yeah.
and its direct hit to the bottom line.
Precisely. It directly impacts their financial projections. And looking even further ahead, they mentioned they are actively exploring federally regulated prediction markets.
Prediction markets.
Yeah.
Interesting. Is that in the guidance yet?
No, not yet included in the FY 2025 guidance, but it's definitely something to watch as a potential future growth avenue, a whole new product category potentially.
It's good to know they're looking ahead strategically. And just from a practical liquidity standpoint, how are they positioned? Do they have the cash to fund all this growth and navigate, well, the potential challenges we're about to discuss?
They seem to have a solid cash position, about $1.26 billion in cash and cash equivalents.
Okay.
And they also took on a new Term B loan of $600 million back in March 2025. So that gives them additional financial flexibility.
And that liquidity is crucial, especially when you consider the next major theme from the sources, this incredibly complex legal environment they're operating in.
Yeah, and that's where the story gets really, really nuanced, because despite these impressive financial numbers and strategic moves, DraftKings is facing, well, a truly significant and multifaceted legal landscape.
The sources kind of dryly refer to these as matters arising in connection with the conduct of our business activities.
Which is putting it mildly. It's like a relentless legal war on multiple fronts.
Yeah.
And it really underscores a crucial aspect of operating in this rapidly evolving industry.
So what are some of the key battlegrounds?
Well, one key category involves the very legality of their operations in certain states. Foundational challenges.
Like in Texas.
Exactly. In Texas, DraftKings actually initiated a lawsuit way back in 2016. They're seeking a declaratory judgment that their daily fantasy sports, or DFS, contests are legal there.
And if that goes against them?
An adverse outcome could lead to significant financial harm and potentially a complete loss of business in a major market like Texas. High stakes.
And it's not just Texas facing these kinds of foundational challenges, is it? We see similar things in California.
Precisely. There's a class action lawsuit in California, the Moore case, alleging that DFS and their Pick-6 contests are essentially illegal gambling or lotteries under state law.
And there was a recent development there.
Yeah, what's particularly notable is the recent California Attorney General's opinion. It stated that California law actually prohibits the operation of daily fantasy sports games for players physically located in the state.
Wow. That creates significant uncertainty for their operations in another huge market.
Absolutely. It could potentially impact a massive segment of their user base if DFS is definitively ruled illegal there.
Okay, so basic legality is one front. Then there are the numerous patent infringement cases. The WinView lawsuits, for instance, seem to be a recurring headache for them.
They are, yeah, a persistent challenge. You've got WinView first, filed back in July 2021, and then WinView the second, filed more recently in February 2025.
And what did those allege?
They allege infringement of multiple patents by DraftKings' core products, Sportsbook, DFS, and iGaming.
Have they had any success fighting those off?
Some. A few patent claims have been found unpatentable by the PTAB, that's the Patent Trial and Appeal Board, which reviews patent validity or dismissed by courts. But appeals are ongoing, and crucially, new suits are being filed.
And the potential impact if they lose these?
It could be severe. The documents mention potential substantial damages, possibly even treble damages, that's triple the amount, or even an injunction.
An injunction meaning they could be forced to stop using certain features.
Exactly. It could require them to modify their products, maybe remove core features of their popular offerings. So it's not just a potential cost, it could fundamentally change their product.
And those WinView cases aren't the only patent battles. We also see mentions of Aero Gaming, Diogenes and Colossus, microgaming.
Right. All with similar patent infringement allegations. It really paints a picture of constant legal fighting just on the intellectual property front.
It certainly highlights the challenges of innovating in what's clearly a very competitive and litigious space.
No doubt. And beyond patent disputes, there's this whole other category. a pattern of consumer class actions. These often relate to how their promotions are marketed.
This seems like another major area, maybe touching on consumer protection.
It does, and it raises important questions about how transparent and maybe ethical their advertising practices are perceived by some users.
Yeah, the sources list lawsuits like Scanlon in Massachusetts, Young's in New Jersey, Bayer Robertson in Kentucky, DeLeon Mearsberger Jr. in New York, Mishek in Pennsylvania, quite a few. What are the common threads in these cases? What are people alleging?
Well, the core allegations often revolve around what plaintiffs claim are misleading promotions. Things like risk-free or no-sweat bets that might have fine print, limiting their actual value.
Or deposit matches that aren't as straightforward as they first appear?
Exactly. Things like the $1,000 site credits offers. But some allegations go deeper.
How so?
There are very concerning claims in some suits about targeting vulnerable users. That includes potentially underage individuals or people known to have gaming addiction issues, either through general advertising or even through specific outreach by VIP hosts.
That's serious. Anything else?
Some cases even allege issues like preventing users from withdrawing funds from accounts that have been closed.
And the potential impact if DraftKings loses these class actions.
Again, the documents warn these could result in substantial damages and potentially require alterations to the company's business. That could really impact their marketing strategies and how they manage user accounts and relationships.
It definitely sounds like a significant area of legal exposure, one that directly touches their customer interactions. And then if that wasn't enough, there are the securities matters, specifically around their NFTs and the DraftKings marketplace.
Right. This is a fascinating area because it really touches on how new technologies, like NFTs, intersect with existing, often older financial regulations.
What happened there specifically?
Well, there was the marketplace class action, a lawsuit filed in Massachusetts federal court. It alleged that the NFTs sold on the DraftKings marketplace were actually unregistered securities.
Unregistered securities.
And that the marketplace itself was therefore operating as an unregistered securities exchange.
How did that play out?
A settlement for that specific case was approved in July 2025. But.
There's always a but.
Right. It triggered regulatory inquiries from both the Massachusetts Securities Division and the federal SEC. Now, the SEC concluded its inquiry, but the Massachusetts state investigation is apparently ongoing.
And did that have further knock-on effects?
It did. It then led to shareholder derivative litigation down in Nevada.
Derivative litigation, meaning shareholders suing on behalf of the company.
Exactly. Shareholders alleging that the company's own officers and directors either caused or allowed the sale of these alleged unregistered NFTs or operated an unregistered exchange. So they're seeking damages for the company, essentially from its leadership. It shows how one issue, like NFTs, can just cascade into multiple legal fronts, class actions, regulatory probes, internal lawsuits.
It really illustrates the complexity. And finally, just to add one more layer to this legal labyrinth, they're facing an IRS audit as well.
Yep. An ongoing IRS audit for prior tax years. It's specifically looking at the excise taxation of fantasy sports contests.
How fantasy contests should be taxed.
Right. And also informational reporting and withholding related to player winnings. How they report and handle taxes on payouts.
And the outcome of that?
Like many of these legal matters, the outcome here is uncertain. The company states it cannot be reasonably estimated at this stage. It just adds another layer of financial and operational uncertainty to the mix.
What really stands out to me, reading through all these different legal proceedings in the 10Q, is that management consistently includes this caveat. They state that while they can't predict the outcomes or estimate the exact losses,
right, here comes.
Adverse outcomes may have a material adverse impact on the company's operations and cash flows.
Yeah.
It really underscores the pervasive nature of these challenges. It's clearly not just one or two isolated incidents. It's woven into the fabric of their operations right now.
Exactly. It's a critical caveat. It highlights the constant tightrope walk they're on. On one side, you have this company performing exceptionally well financially, driven by really strong core business growth and smart strategic capital allocation.
Record revenues, record profits.
Right. Yet, on the other side, it operates within this deeply complex and constantly evolving legal and regulatory framework. And that framework is being tested constantly across multiple states, multiple product lines, DFS, sportsbook, iGaming, NFTs, promotions.
It seems their ability to navigate this legal minefield is becoming just as critical to their long-term success as their market share gains or their product innovation.
I think that's absolutely right. It's a huge part of the story.
Absolutely. So This deep dive, it truly shows a company that is rapidly innovating, rapidly expanding, but doing so in what is clearly a heavily regulated and, frankly, highly scrutinized industry.
It's an incredibly dynamic, high-stakes environment, to say the least.
It really is.
So maybe here's something to mull over. As digital entertainment and real money gaming continue to evolve so quickly, how will companies like DraftKings balance that need, that imperative, for technological innovation and aggressive market expansion
Which they're clearly doing.
with the increasing demand from regulators and maybe the public for stringent regulatory compliance and robust consumer protection, especially when totally new product categories like those prediction markets they're exploring emerge?
It really is a complex tightrope walk, as you said,
Yeah.
balancing growth and compliance.
And that balancing act could very well define the future, not just for DraftKings, but for the entire industry.
A complex tightrope walk, indeed. What stands out to you about DraftKings' current trajectory after hearing all this? What questions does this deep dive spark for you? We'd genuinely love to hear your thoughts.